Good afternoon. It is the second last day of 2021 and a disappointing day, I would think, for a lot of bulls the way we closed off at the end of the day there. And we're going to go through, obviously, the stock market we do every day, but special emphasis today on natural gas, which has been trading pretty well clinical, as we would say, but today you got that collapse that a lot of people were expecting to actually happen tomorrow, but it happened today. There's a combination of that. The vol, which we're going to spend a lot of time on, stock market came roaring off, but also we've been having higher temperatures and etc. So we'll spend more time on that. So just to wrap up on what we saw today. So 1 second there. So we saw, let me bring that chart up there. Sorry, a little bit disorganized there. I just got a bunch of DMs on natural gas all of a sudden. So natural gas today was the big one, of course. But in actuality too, the S&P, even though it didn't do much, it was telling. We saw two things we talked about this morning was 4,800 is a big level on the SPX and the ES and on the SPY, all around there. We opened up, everything was up at one stage. All 11 S&P sectors are up today. I think we finished up with, how many was it, Alex? How many finished up? Like 3, I think. Let me just double check on that. But I want to say
it was pretty
3.
de minimis.
4. So it's only 7 finished lower after all being up. The worst was information technologies, which has been a pattern. I mean, hasn't that been down every day this week, guys? I think it has, hasn't it? Other
For
than
the most
one.
part, yeah. Yeah, it hasn't been a good day for the larger cap, or the good week, or really a good day for the larger cap techs. There's definitely been some distributive flows there.
Right, and one that was interesting, and so I just said we got a little bit hesitant there at the start because right as you would know it when you started, we started, I was getting a bunch of DMs. A lot of them have been, why is energy down? Oil was up. Well, energy is also natural gas, right? So energy was down 7% today, and that was equally the worst with information technology. Real estate was up, utilities were up, and healthcare were up, and I think communication services was break even or up. So it gave you an idea what was going on. Now, Alex is going to spend some more time on the breadth there later on. Apple was a 180. That finished lower, as we were saying. That was that 180 level. It got over 180. Yesterday got over 181 and both throwing back. In a thin market, the size is very, very significant. And remember yesterday Alex spent some time talking about JP Morgan specifically with their massive fund. Well, that's the sort of thing that dominates. And when it's that public, many people know about it. So there's many people with that option line, that open interest line that we're talking about on that stock, plus other stocks that we don't follow as diligently, but we know what many of them are. Tesla reversed, all the semis got whacked there at the end. Look at this hourly chart to give you an idea what went on today. Right, we had that bull flag, it couldn't really break up, could it? And we had that 7/8, just kept holding. You can see all the little weeks. Finally, it broke the Tenkan, and look what happened, bang. Couldn't even hold the cage in or that. On a 5-minute basis, that's even more specific. Remember what you're looking at. Once it got under all this, it never regained it. We just fell basically all day. So it was a pretty easy short, actually. But it looks massive. It's not that really big. But it was one that was hard to make money on vol till about here on options. Because even though I had a straddle on, until here, vol was falling that quickly, which is it's just because this was slow. It wasn't here till I kind of made money on the day, right? From the way I trade, anyway. I'm talking about the options. Futures was obviously pretty straightforward. Nasdaq weak all day, I believe. Other than that little initial inertia, is the nicest way to put that kind of rally. We did get over this level from yesterday. Remember, we couldn't get over there yesterday, and that finished very weakly. Didn't go through that low, so that is a positive. Tomorrow is going to be interesting because it's the last day. You can see Apple, again, that 180. Just look at that. See, this is the other optionality up here, right? That we're all trying to get to, 180-250 and the 3 trillion. So in a perfect world, this would hold Cajun for a bull, gives you a bull flag, and then we go up to new highs. Can it do it on the last day? It's getting harder and harder as it's down that amount. And here's our Russell. That completely gave up the ghost. And this morning, was it this morning, guys? I want to say about 10 o'clock. Everything was just going green, wasn't it? That small cap,
Yes.
high risk type stuff.
Yeah, there was just a lot of buying going on. Not a lot of volume, but a lot of buying going on. Some unusual activity and options and some of the real high flyers like Neo that were running hard today. But a lot of this looked like a combination of short covering and then also kind of like people trying to front run the January effect. Maybe it's starting a little bit early. And then there's, like we kind of touched on earlier, there's this anticipation that there's going to be $8 billion or so worth of S&P buying by the JP Morgan hedged equity fund that just corrected their site to indicate that they're doing all their hedging activities tomorrow for their role. And the way that they have their fund set up, they basically every month are in there doing something. But it's noteworthy for December. It's their primary fund. It's where most of their investors' capital is. And so that's going to be their largest role. It's also one of the biggest gamma roll-offs, or if not the biggest gamma roll-off we've had in 2021, if not ever. So it could end up being a pretty interesting day because there's, like we've talked about, a lot of senior guys are off the desk. You got junior guys and HFTs running a lot of these flows. So some of these moves get a little exaggerated either way.
Yeah, I mean, and one thing that surprises me, I guess, I've been part of some of these big funds over the years. What really surprises me, that it's obviously in their charter, is why they're not doing some of that already with Vol so low. And Vol was really low today. In fact, we were making a bit of a joke about it on Twitter. And then finally it ran up at the end there. But common sense, or I guess I'm pretty conservative, you don't wait till the last minute because anything can happen, right?
Yeah.
Anything can happen. So that's an interesting thing that did surprise me a little bit. And it was almost the way they did that, refresh their website, it was almost braggish. Is that a word, braggish? But certainly like
Braggadocio?
yeah. They're like, hey, you idiots, we're waiting until tomorrow. Oh, okay, thanks, guys. Now, the other chart we want to look at is Nvidia. Look at Nvidia did. It finally picked itself up after this selling for, is that 3 days? Bang, bang. Very clinical, through clouds, recovered, and you saw these little kiss of deaths. And then finally we had a bounce, but look, we couldn't get through the cloud and we couldn't get through Murray Math. So an important thing is what I do anyway, what Nova Wave is about is trying to control your emotions. Your mind is your biggest weakness. It's your biggest strength, but your biggest weakness. So you want to recognize that. So Nova Wave was originally, over the years, was looking at different technical systems that actually work for you, and they cross check you, for want of a better word. So I use Ichimoku and Murray Math and basic pattern and Elliott Wave to cross check that. So you can see that here. When it broke that, we've just been relentless down in 3 ways. Classic, right? 2 versus 4. Remember, 4's got to be longer for 2. So you just need to know basic, Elliott. Don't get all caught up in anything, really. And the way I am, and the way a lot of traders, we're kind of that high energy alpha B that anyone who's not a trader hates, right? But we like visual things. And so this was perfect. 1, 2, 3, 1, 2, 3, right? Well, look at that. Spat the top of the channel. And this is a 30-minute, which gives you enough to be between your swing and your long term, but it just gave it up. Look, this is a mirror image where we just looked at SPOOs and everything else. So I'm going to bring Mandavi on here because he actually traded more stocks today. So he was in the coal face of this sort of stuff that went on in Russell today. Do you want to talk about that, Mandavi? Some of those stocks
Well,
specifically?
I didn't, when the market opened, I didn't trade much futures. I got into some positions. Um, I got into this RELI, and I held this naked brand overnight. And then I seen OPA was going to go down, and it happened to be they sent me a notice that I could short it, so I shorted that, and that went okay. That was probably my nicest trade of the day. Then after that, I was long a lot of stuff, and the market was doing good at the beginning, thinking it was going to make a nice little change, but it did not work out as the market collapsed on me at the end of the day. And what started out as a really good day, with a nice winner, and I shorted MU too on that news with the China thing and made some money there, but uh, just got too deep in trying to uh, buying it too much, so giving up on the trade and maybe swinging the other way. But I thought today might be the last Santa Claus rally. Basically I gambled on it. I should have just gone with my instincts, and gave back the good amount I made in the morning, and plus a little bit more.
Yeah, it looks like the charts on Russell and that kind of showed that, and that's good insight there. I mean, as I said, has it been 2 weeks now? I've been pretty well just traded the SPOOs or the ES, sorry, the S&P futures contract. I don't know why we still call it SPOOs, but everyone does. It seems to be what all started off in the pits. Anyway, that Apple, I like Apple slowed down a lot today. It's been good for a couple of dollars today. I don't know if the range felt like it was $1. And of course, oil and natural gas. So it was a good day for me, given
Oh
the
boy,
two things that I like actually moved pretty good. So on S&P, to be honest, you could have been long at the top and short at the bottom. You wouldn't have got hurt too much. It didn't move too much. But individual stocks. And here's our market profile, and you can see we've been steady for 3 days, which is what we've been talking about. And there's been a lot of guys that are good on that have Twitter accounts that are good guys, like Sam, and I can't remember what his Twitter thing is, Sam Caston, and people like that Alex has mentioned yesterday that have covered this very well. So this is market profiles showing it, but basically that's what's going on in options, right? And so our POC tomorrow is going to be up here. Let's see if we can get that filled. And it could be a day. Often you've had 3 days of nothing, and nothing as in, but that's a lot of energy, right? Before we go back on the stocks, yes, we will talk about natty gas. So today we had the EIA report. So that's the last major report for the year. Tomorrow being the end of the year. So that's out of the way. It was as expected. It was the draw that was expected, and you can read about that on the site. I won't bore you with the details. But coming into that, we had, and I've spoken about it's ad nauseum for the week. It's been a really good trade. Sell $4, buy 360, 370, right? We open up today mid-range. It had already broken down. We'd already had the sell-off was already on those higher G2 models, basically saying it's going to be warmer for longer. I mean, I mentioned this morning that I have air conditioning on right now in Houston. Houston is the Henry Hub. That's what you're trading. That is that futures contract. If you're trading natural gas, know the region you're trading. There's many basis trades. Same reason if you're trading oil, WTI is West Texas Intermediate. It's not Brent, and it's not Louisiana Sweet, etc. Right? So anyway, we had that, and we also had, because of that, they go together. Heating demand days were down 5% year on year. We're coming into the end of the year. We know there's a lot of spec guys being confusing domestic natural gas with European natural gas, specifically Holland and being the one that's been on tear, and England. So that rubber hit the road today, as we say in natural gas, right? And so we had that going on. We also have a couple of ETFs that have grown. Everyone used to know UNG, UGAS, and DGAS. Well, what's happened over the past year, as natural gas became popular, so I give you the tip, it ain't going to be popular for a while now because most speculators were long. But we had cold, which is cold is KOLD, not COLD. Let me just put that on mute. Cold is the negative or the bearish ETF, the double on it, and what's the one on the positive is called boil. So it kind of boiled a few people alive today. Is that kosher to say that? But that's kind of what
We'll go with
happened.
it.
And so people wanted to get out of that, or they had to margin it. And actually, coal got halted today. So to put that in perspective, natural gas I haven't seen halt many times. So because that's double, it obviously went double what Natty did. So let's look at the charts because it was clinical, and hopefully you guys have been following with it. So that's the main reason you want to subscribe is when we go live. So this is our oil. So we'll talk about that in a sec, and the tie-up, because that's another one that gets confused. But look at daily. We've talked ad nauseum about this continuation pattern, right? Continuation patterns tend to go where they've come from, right? And we have all this marked weekly, and basically the advantage of a good trading system is you don't have to change it every 5 minutes. So this has been in play for a long time. And this double top here was 8 years in the making at least. But anyway, look at this. So we broke this morning. We were under this morning, this daily tanker, but we have been red. These spikes are rinses. Look at this one, down, then up, down, then up. Today, we closed almost at the low and below all this. So if we go to the hourly here, which is going to be this one, correct? Getting old. So we look at this market, this is our hourly. So we came in this morning, perfect. We'd done all this test already. It had been done for us, right? Cajun spit, Tegan spit, down in 3, up in 3. I mean, this is all classic stuff to get familiar with. Markets correct in 3s and go up in trend in 5. That's simple what Elliott picked up all those years ago, and you've all picked it up if you trade Gartleys and all that sort of stuff. Anyway, look at this. ES comes out, EIA comes out, and then you got this final kiss of death right here to really accelerate lower into the close. This was into settlement. So that was very clinical trading on many levels here. Murray, you're using your Murray math, your Ichimoku, they all kind of came into one. And your fundamentals, right? Fundamentals. So don't be all technical, don't be all fundamental. Take a little bit out of it all. Now, the third thing is understanding crowd behavior. And watching options gives you a great idea of crowd behavior too on calls and puts. And here's your 5 minute. So here's when that EIA came out right here at 9:30. See that Central Time? So that comes out 9:30 Central, 10:30 Eastern, and boom. And it never looked back. We didn't even really get a bounce here. And then we closed right at settle. This is settlement. Right in here. And we've rallied up since. Basically squaring of those shorts or however and remember, a lot to do with the taxation side of it is optionality, and we'll talk a little bit about when we get back to stocks. But if there's any other questions on natural gas, ask me now because we're kind of done with that, unless there's something more you want to know. Oil we looked at real quick. This morning we saw that around here, right into the daily cloud. The natural gas would have affected that a little bit, but not too much. Just purely because of energy funds having to sell. And you saw that's what oil did today. Very clinical, double top. Sat right at the top of the cloud. Really not much to do there. And so you don't want to overtrade it. A lot of people get chopped up in stock markets and commodity markets at this time of the year. You got a perfect ABC on oil if it holds here on the 5 minutes. See that? Right into the pivot. Couldn't get more clinical, really. It's easy to be clinical when no one's trading it, though, right? So
Yeah.
I think we touched on pretty well everything there briefly. So I want to bring Alex to talk about the depth of the market in the S&P particularly, and what we touched on a little bit of the options. Maybe we'll go a little bit more on that. But I think, just finally, Italy, Germany, and Spain have actually closed for 2021. They're sensible. They're going to prepare. They're all good food countries too. Paris and London are on half a day tomorrow. I think Australia's shut, or it may be half day. In the US, I think we go at it all day, don't we?
We do.
Yeah, and all those Europeans closed up today. The selling all came after Europe. So there we have it. Gold was the only other notable. It actually held at 1,800 and closed up $8. So and the cyber stuff, the crypto, all finished lower last time I looked at it. So and some of that's down pretty good. So, but they don't pay tax anyway, do they? Half those people. Forget
Well,
when you're
that's a
laundering.
whole other that's a whole other conversation we could probably go on.
Yeah,
We could
where's
probably go on for
Johnny?
hours
Johnny.
about.
So when I'm laundering money, do I tell the IRS? I can't remember.
I have no comment on any of that or experience in that realm, but I can definitely bring us deeper into the markets here. So today was a day
Well,
where
hang
we
on,
started out.
just one question. There's one sec. There's a question from Seb. Thank you for joining us, Seb. Are you guys traders or long-term holders? Well, I put them all in together. So when I start, well, other than it's just a new scalp, like which is what Madavi was talking about on order flow or something, they're just pure scalps, But if I'm trading oil, natural gas, S&P, Apple, something with longevity, I start off having a basis where they are weekly. I go through weekly, daily, 240 all the way down for an overall trend. So where the major levels are. And then when I get into something that I intend, so you always have the intention that you want to be long or short it, right? Other than those situations I said. Now with that, that means that as it starts to work, I will then change my position. And in the sense that if I've got in just purely from buying futures, stock or currency, whatever it may be, I then will, once it starts to work, I'll then develop an option structure around it. Meaning, if I'm long, I will maybe create a call spread. I will protect myself on the downside with volatility and it's cheap like right now. Some stuff I've held for 20 odd years. That would be a long-term basis. They're paying dividends and things like that. I'm pretty specific when they're long-term. They've got to make money. So it probably rules out a lot of stocks a lot of people like to play. Doesn't mean I'm not going to trade those ones and maybe over weeks, but I'm not going to put them away in a longer-term situation, for your kids kind of mentality. So those I want them to make money. I want them to pay dividends. And so that then becomes those kind of things come into the equation. But yeah, I do look at those things differently, but I'm certainly not a in and out scalper unless in certain situations, because you're right there at the coalface, you will take advantage of that. So, and I do a lot of in and out through the day in options, playing ranges, spreads, all that sort of thing. So hopefully that answers your question. Okay, sorry, Alex, go ahead.
No worries. So today was a day where we started off with pretty strong breadth across the NASDAQ and New York Stock Exchange, but really especially the NASDAQ. And a lot of the smaller and mid-cap growth names were really on fire earlier in the day. Looked like it was a combination of short covering and then maybe a little bit of trying to front run the January effect that's suspected to happen, where some of these stocks that were sold down pretty hard may get bid up pretty hard. And we've seen largely an abatement of almost all tax loss selling. The last day for retail is really going to be tomorrow, the 31st per IRS. And then, diving in, we were looking at sectors, factors, and a couple other areas I want to touch on. So today was a day, even though it started off stronger, clean energy really ruled the day. And so if you look at, solar companies, wind companies, other kind of renewable energy companies, that was the leading factor. The losing factor, interestingly enough, with that in mind, was oil and gas. And we saw natural gas getting sold down pretty low. I think it was down about 6.7% or so at the close. So certainly a weak day there. And there was a lot of counterbalance between that and what we saw in renewables. But other leading factors included junior silver and gold miners, senior silver and gold miners, retail, biotech, real estate, and communications and utilities. So there was a bit of a defensive bid as the day went on. I think that's important to take into consideration because it certainly wasn't how the day started. We had a lot healthier of a bid across many more sectors in the earlier part of the day. If you look at my Twitter feed, you can see where I was making some commentaries about that. And that shifted towards the later part of the day. We really started to see some distribution pick up around 3 o'clock or just thereafter across the broad indices and then in a lot of the stocks there within. In terms of factors, the only factor that closed green today was small cap growth. So really everything else was faded throughout the day, and a lot of these were participating to the upside. High beta large caps was the weakest, followed by large cap growth, interestingly enough. And when we're looking at some of the growth proxies, if you track the growth sector and you're looking at some of the flows that are happening there's some things that I like to look at. I obviously like to look at ARKK as kind of just a heuristic for appetite of risk in that space. So that was still pretty well bid, even though it was bid up over 4% earlier in the day. It closed up just under 3%. IWO obviously had a little bit of a bid. It was up just about 0.19%. That's small cap growth. QQQJ was bid up 0.78%. That's actually some of the emerging internet companies within the NASDAQ. So that's kind of a good proxy for
Who's
breadth,
in
upside
that one?
participation.
I'm not familiar with that one. Who's in that QQQJ? Just one
So
that I may know.
Yeah, so inside QQQJ, the heavyweights that I see listed, and this is based off their last quarter's filing, so you never know if there's been some changes underneath the surface here. But what I'm seeing is things like CrowdStrike, Roku, Fortinet, Trade Desk, Zscaler, Old Dominion Freight Line, for whatever reason, Garmin, Zebra Technology, Liberty Broadband, and Datadog. So a lot of names.
Those D-Dogs are familiar one.
Yeah, so I mean, I'm pretty familiar with CrowdStrike, Roku, Fortinet, Trade Desk,
So Roku,
Zscaler,
I thought would have been more. They've been around for a while, so I guess. So that's good to know, actually. So they're better quality than what we'd initially think with the name of the.
Yeah, they're called the Next Gen 100. So it's just 100 names inside the NASDAQ that are kind of seen as emerging. And so that had a pretty good bid. Even the equal weighted QQQ, the QQQE, actually did better than the NASDAQ itself, which I thought was pretty interesting. When the NASDAQ closed down 0.36%, the QQQE actually closed up 0.26%. So there's outperformance factor there of about 0.62%, which is pretty encouraging because typically you see the opposite. Typically you see the mega caps leading and all the small and mid cap tech just getting either sidelined or crushed. And we also saw a pretty decent bid. Actually, corporate debt bid via the LQD as a proxy ended at its highs on the day. So, even though we saw some fading in some of these other areas that are sort of longer duration, high beta risk, we did see some of the underpinnings like corporate debt and even some of the high yield stuff close up or flat, which was an encouraging sign overall. Like JNK, HYG, may as well call them both flat on the day. Inside the NASDAQ itself, Apple closed on its lows, wasn't down too much, about 0.79%. But certainly saw some selling that intensified into the close. It really had a run just after the cash open up to about let's call it 180.56 on that high, and it was faded throughout the day with lower highs and then lower lows into the close. Microsoft, Amazon, kind of similar stories there. They had a strong start, and then from the gate, they were pretty much sold throughout the day. Same with Google, Tesla. Facebook actually managed to close just a little bit higher, but a similar story where it really couldn't get its footing back. It tried to make a run towards 2 o'clock and then just got faded into the close. Really, the only things that were big green.
I gather, huh?
Yeah, there's probably a lot of traders that are kind of confused about the future of Facebook right now too, with that a little bit haphazard branding effort. We don't know where this is all going to go, but from my
Right.
perspective as a long-term gamer, I'm not sure that VR is necessarily the future. I believe more in AR. But nevertheless, in terms of the Nasdaq, Facebook, Adobe, Netflix, PayPal, Comcast, Moderna, and Charter were the only ones in the heavyweights that were bid up. Everything else was pretty well close to flat or red. Inside the ARK ETF was a totally different story, where the ARK ETF again was bid just below 3%. Tesla was sold down, but almost every other heavyweight component was bid up pretty well today. So that was interesting to see. And again, I think that's some short covering and front running the January effect that's expected. Inside the Treasury market, we had a flattener, and that's where rates on the longer end of the curve are falling faster than on the shorter end of the curve. And in real rates, we saw actually real rates drop across the entire yield curve to levels we haven't seen since December 22nd or earlier, which is bullish for some of the higher beta, longer term risk stuff. So if you're looking at growth stocks, tech stocks, crypto, junk debt, corporate debt, precious metals, all that kind of stuff usually gets a better bid from this kind of move, especially if it continues. If you continue to see a bid in the bonds, a lot of these other things tend to get a better bid too. And part of that has to do with the fact that when real rates go deeper negative with reasonable velocity, people start to put on more risk because treasuries really do become return-free risk. Right. So you can maybe get a better return elsewhere. That's kind of what the investing and even trading mentality starts to become in that environment. And tomorrow is the last trading day of the week, the month, the quarter, and the year.
Thank God
So
for that,
what we
right?
print,
No, just joking.
what we print though is it's going to be important, everyone. So that's going to be your weekly chart close. That's going to be your monthly chart close, your quarterly chart close, your yearly chart close. So those candles are important to watch, and we'll probably do some kind of recap, whether it's tomorrow or sometime over the weekend or later, just to kind of talk about the year in review, where everything really closed. But another thing that's happening tomorrow that's important is the JP Morgan Hedged Equity Fund A is going to be rolling, I think it's something between, they have a $20 billion fund that they're hedging, right? So there's going to be a fair amount of hedges. I think it's something between 12 and 15 billion, but someone else can correct me if I'm mistaken there. And net buying of S&P futures is going to be something in the realm of about $8 billion from
Right.
the calculations that have been out there. Which is interesting, right? If that happens, and again, if the market's pretty low volume and not a lot of selling pressure, that could push things up over 2%. So that's something to keep in mind. Doesn't mean it's going to happen. There are all kinds of things that they can do to try to spread those buys out and try not to move the market too much. There's also, it really depends on how the market's trading. Like if the market starts off really weak and we have a lot of selling, they could just absorb some of that selling rather than move price too much. So we really don't know how this is going to affect the market, but we can assume at least, from a order flow perspective, it adds a positive bias. So depending on how the market's trading, we got to be a little bullish because Europe's basically closed when we open up. Right.
Well, there's only a few Europe's open tomorrow.
Right, and they're half days, right?
Yeah, it's England and France.
And so they're closed when we're open, right? So when we have our cash open, they're already closed. So you got to be a little. When the Euro Bears are on hiatus, and I just call them the Euro Bears because almost every time Europe closes, if we're having a kind of sell heavy morning, it tends to lighten up on the pressure.
They were the highs today, weren't they? When they go out at the highs, yeah.
Well, some of them were flat. You said like the Euro Stoxx 50 was kind of flat.
It finished up at the end of the day, but not much. But what I mean is when they went out, we were at our highs. We actually sold off after it was done with us. So they're already drinking their pasties and whatever else they're doing over there. I know, hang on, French are on tomorrow. Yeah, so.
Yeah, we sort of started consolidating, but but we also started today strong. So some of the days where we start kind of strong, then we have the opposite effect at the Euro close. The flows are just interesting. They just seem to shift around that time. And so, anyway, just making a joke more than serious. But, when the Euro Bears are off on vacation for New Year's, maybe we get a better bid in the front part of the day. We'll see what happens. But sometimes we get a stronger bid in the front part of the day. We fade into the close like we did today. So that's another thing to watch out for if you're intraday trading. But, yeah, we've got a lot of things going on underneath the surface with a large amount of gamma rolling off. I think it's near record or a record for this year or possibly for the history of the market. And that some of that's going to be part of what JP Morgan is doing. But there's other parts of the market that are certainly hedging through indices or other kinds of options that are expiring. So something to keep an eye on. You could have more wild price movements. You could certainly expect to see things, moving in a more technical matter also because, there's not a lot of people at their desks. So bots are accounting for more order flow. So movements are more algorithmic, more mathematical. And they were very mathematical, very, as Andrew called it, very clinical today. And I think that kind of trade probably continues on into tomorrow. But, this is the end of the 2021 trading year. Tomorrow is the last day of the year. So, if you're retail, and you do have tax losses that you're going to want to harvest against your capital gains, the IRS says that tomorrow's the last day that you have to do that. So that's the 31st of December, 2021. So just keep that in mind. Same thing goes for selling. If you sell stuff tomorrow and you've got gains, you're going to realize them in 2021, right? So the trading year is very much still in effect for retail until we close tomorrow.
Right, yeah, definitely, and they'll print that. There's not a lot of negotiation with the IRS. It's pretty clinical there too. The cynical bit of me, as far as the pricing of the market tomorrow, it is the day for calculating bonuses, and it is, strangely enough, the 31st is actually finishing on a Friday, last day of the month, last day of the week, everything. So that makes it easy for the bookkeepers for sure. But it also makes it a little bit different to normally how they would do these sell-offs. Remember, the gamma rolls, however you want to call them, do they let them expire because there are taxation effects? So that bonus is also a taxable event too, don't forget. So that's going to be interesting what they try there. The cynical bit of me is, what that is, how that's going to print. What's interesting, we kind of joked, we weren't really joking, we're talking about the big thing for TV screens is two things. One, if they can get another high, there's been 69 closing highs. There hasn't been, they keep trying, so it did hit a high today and yesterday, so it did hit those other highs but didn't close above them. The other one is, and Apple has some work to do now, but the 3 trillion, which would just make it glorious for the CNBCs of the world, is in at 182. Let me just check my notes. I think it's 182.86. Yeah, 182.86. Sad that I remember that, isn't it? That puts me in the nerd category. So that would be the other thing, but we got to bounce. Well, it can do it. We've seen plenty of $5 bounces. So that's two things that I'll focus on. If it's not there, all we'll hear about is Omicron all day tomorrow, no doubt. As far as natural gas goes, that's the big move for the year, I would think. So you'll see some positioning and squaring out into next year from now. That's all to do, as I keep harping on about. I know it's boring, but weather. And I did see on that note, ERCOT sent me an email today that they have winterized the Texas system, and in case we have an Arctic freeze again. Nice to know a year after the event. Oil, the other thing we didn't mention was OPEC. There was an announcement that came across Reuters that they are expected to continue the same way with their production freeze and cutting. So that also gave it a little bit of a pop today. Remember, higher oil is actually bearish natural gas because it means the drilling isn't going to stop, production is not going to stop, and that was another bearish factor actually before even OPEC, because if you can get more out of your liquids, then it makes your natural gas worth more. And until $3.50 and $76.40, there's a lot of money being made in oil and gas, in the fossil fuels. There is not, and in the new year we'll get different people on to talk about this from the energy sector, how that is not, because of the whole ESG, fossil fuel bad, and the what's the word I'm looking for, guys? When you make something really bad, like the devil sort of thing. There's a word for it. But there hasn't been the money go into production. So if the economy actually picks up, it's not good for that. So there's not enough oil and gas out there, basically. And coal, I know, and this is an interesting one I'll touch on. So during the year, we made some good money on a stock called BTU, which is Peabody. But yes, they were making a lot of profits, but they're limited to how much coal they can reproduce, right? So we're going to get to the point where there's not enough coal, there's not enough the wind and the alternatives in wind and solar isn't enough at this point yet. So therefore, it's going to put a drain on those other ones. So keep an eye on them. Remember that we've already sold a bunch of our SPR. We're at our lowest SPR since 2002 or 2004, one of the two. We're limited what we can do. So I mean, the cynical bit thinks they almost want Omicron sort of thing where they slow down everything. But, so you got all those things to take into account. Technical is a great way to maintain your discipline, your simple mathematic risk. And if you feel really uncomfortable about a trade, just don't do it. But when everyone else is selling, it's a good time to buy, but it also depends where it is as far as the pattern goes. I think we're pretty well covered everything pretty well today. If you got any other questions, please shoot them. But do you think of anything else, guys? I think we covered everything as far as the general markets go. There isn't much happening in the bond markets other than what was mentioned. Across the curve in Forex markets, nothing too much. There was a meeting today between Putin and Biden, but I haven't seen anything on it. Has anyone?
There was some news blurbs about it, but I wasn't really focused on that. It didn't seem to be moving the market much. So it kind of sounds like things are just sort of in a wait and see holding pattern. I don't know that any major milestones were made, but I have to check the headlines. But
yeah, I found it
yeah,
unlikely that.
yeah. I mean, there's a lot to work out. It's not going to happen in a meeting. But yeah, so my takeaway so far going into the last trading day of the year, last things I would say is, keep your position sizes small if you really don't have high confidence. Like Andrew said, if you're nervous about risk, make sure you're sized accordingly. There's no time to necessarily have to be a hero. There's been a lot of talk about what's going to happen because of XYZ trade, like the JP Morgan trade. That doesn't mean that there's any assured outcome. The markets can still do what the markets are going to do. So, anytime anyone says something's going to happen, whether they're an expert or not, you also want to make sure you're comfortable with the level of risk. And you got to be understanding that by the time it's on FinTwit, and by the time you see it, a lot of other people that are more well connected and smarter than us probably know about it. It may have already happened, but if it doesn't, has it happened? They may have already, put in their positions. They may already be front running it. There may already be a higher risk to you getting in later than you may think. So just be mindful of risk. There's ways to manage that with things like call spreads and, other kinds of techniques that you could utilize to try to cap your downside risk. But just ultimately be mindful of risk and make sure that when you go into a trade, you're using a system that defines what your risk is so that if it's exceeded, you get out. And that how you're going to quantify validating that trade thesis. Are you going to be in for a certain amount of time? Are you looking for a certain price, a certain technical level, something else? Like make sure you understand what you're doing. So when you're in the trade, you're not navigating the unknown because you're not going to make good decisions if you're doing something like that. So just my 2 cents, not advice, for trading or investing, just lessons I've learned and things I've talked to, about to people like Andrew and other great traders that I know. You really got to be disciplined and have a proper mindset to be doing well consistently.
Yeah, I mean, 100% on that. In fact, W.D. Gann, the thing, you can go and study all this stuff, but he said there's 3 rules of trading. Discipline, discipline, and discipline, And the markets are unpredictable, and you learn something new every day. So something always will surprise you. But that unpredictability is predictable. People are very predictable, the way they behave. There's actually been a few people on our timeline, I think both our timelines, the Trades Community one and Markets for Mayhem, talking about things like crowd and recommending books. So just simply understanding crowds, the madness of crowds is one. There's a French one that's, I think, is a classic called The Crowd from Gustave Le Bon from about around the French Revolution. And we're now in 2021 and nothing's changed as far as people. And we know a lot of the partisan politics, they kind of harp on, but they're doing it for the wrong reasons about politics and controlling the masses and something. But all that flows through the market. Don't
Yes.
let, and that's one thing, never make an investment decision on whether you have a political view, like whether you're extreme right wing, left wing, moderate, bloody worship Biden, hate Biden, Trump, all this stuff. It's irrelevant. Make your decisions cold, clinical, based on something. But you've also got to get to where you feel the market. So you've got to let the market in, and that's why your personality is going to see certain stocks, certain markets, options, currencies, the most crazy stock to you might be normal to someone else and vice versa, Actually, and on that
And,
note, I just want to so have a bit of fun or just to understand another mindset. Jump on Kathy Wood's Twitter. It's Kathy.Wood, just her name with D in the middle, and it's IE. And it's fascinating to what she feels, her view of what the market is. She was obviously very big, and some people are just saying that's all good luck now because it timed in she spoke to that new money, that retail mail money, and then she was up 300% for a couple of years, right? And now she's actually down 42% from the high. But if you were money weighting that, she's probably down, right? But what's
yeah,
interesting
and
is her view. Right? Oh, sorry, Alex, go ahead.
yeah, actually, Seb had a question about growth and kind of what our views on the factor are here. So I just wanted to quickly weigh in on that because that's a good segue since you're talking about ARC. I mean,
Mm.
growth is a big space. There's many sub factors in growth. There's small cap, mid cap, and large cap. There's companies that are more established and profitable that are still growing rapidly, and then there's the more speculative side of growth where companies are maybe not even making any revenue or very de minimis amounts, like a Rivian. That's kind of the more speculative side of it. And you got very small companies like biotechs, kind of a similar situation where you run high risk of dilution as a small investor in a company that's not making any money. So my take on the growth space, since you asked, I mean, we covered a little bit of this earlier, but I just want to dive in since you asked. I think that we are heading into a macro backdrop where it's likely that real rates could continue to rise. And it's likely that liquidity continues to become more constrained, although that might be offset by the People's Bank of China. So it's really worth keeping an eye on how that situation with their dovishness and their potential pivot towards accommodative policy to offset some of the tightening impacts of the Fed and other central banks. It's important to see how that plays out. Recall that the peak wall of central bank liquidity, really that velocity started to fade after February and into May, and that's when a lot of these same things peaked. So perhaps if PBOC steps up and puts in some outsized liquidity, we could see a bid in the space from that. But overall, if we have a 2022 where the economy is slowing, real rates are rising, and liquidity is tightening, if PBOC isn't offsetting the rest of these global central banks, then it could be a difficult year for the space. These are long duration risk assets. They're high beta. They're sensitive to rates. And that means that as real rates rise, people see treasuries as less of a, returnless risk and more of an attractive asset to add. And on the other side of that, when real rates drop and treasuries become more of returnless risk where you're basically paying the government to hold debt, then there's more temptation to go further out on the risk duration curve, and that gets you more into things like growth and innovation and technology. And the further out on that curve you go, you get to things that are more speculative, that don't make profit, that then also don't make revenue. And obviously you're further out in the risk curve, there's higher risk, but there's also higher potential for return depending on what it is and how it goes. So I would say the outlook for 2022 is a lot different than the outlook of 2020. In 2020, we had a veritable wall of central bank liquidity that entered the system, and almost anything that had a stock symbol got bid up, and the most speculative stuff did extremely well. In fact, ARK was up over, I think, 100% in 2020. And so 2021 was a year where it gave a lot back from the highs, as you said, like 40%. And that's actually a statistical average. When a fund does over 100% the prior year, the next year it tends to fall something like 40% from its
I
prior
think
high.
it
So that's
said
actually
it was up 300% annualized returns for a number of years, as I'm reading here.
right.
But
So
she's kind of a victim of her own success by being. I think we've spoken about this a number of times. Being an ETF, people comes in, she basically has to buy, so she pushes it up, and conversely the other way as well.
Right.
She's got some great ideas. Some things I don't agree at all with her umbrage. A lot to do with technology. Like, for example, the reason where we are with oil and gas is because of technology, because of fracking, and because of US companies like Exxon and people like that. I mean, so that was all technology. Who's to say they're, and they're now, a lot of these companies are cutting edge with the new renewables and all this, but it's all been done at a normal pace. So looking at her tweet, she seems to think energy, financial services, transport are all just going to go away to something else. Everything takes time, and I think that's what's got her. Where she's got caught wrong is there's some great stuff in all that, but she's almost too zealous. And I don't want to pee people off by saying what I'm going to say here, but it's not all. I know she's very much into the ark and she wants it all. That's why she's called Ark Noah, etc., etc. She has good intentions, but I think sometimes people change and vary in different times, and it's almost like she doesn't want to admit she's wrong. She's been dead right about a lot of things. What I don't like, and I think I said this in the room today, she seems to be over trading to me. If you're an investor, you can't overtrade too much, you know. But to me, that tells me there's something wrong with the thesis. If I'm wrong on something, I cut it, I'm done, and then come back to it later on, perhaps. That's the problem I have with her. But as far as interest rates go, I look at the high-tech companies, high-growth companies, sorry, I didn't mean to say tech. In another way, some of them have done very well and very smart, taking advantage of their big run-up in prices. They were aware they've been there before. You know, Elon Musk is a good example, but the smaller ones too. They took advantage by doing secondaries or just simple stock equity raises when the price was really high, so they can survive the next phase of growth. In other words, when the market's gone off them, they've got good cash positions. So I would look at that. If you really like an innovative idea, I mean, it's not like really long term. I think Seb asked the question. I look at dividends and all that sort of thing. But I'm not going to, I mean, I'm from Australia and I live in Texas. So obviously I've been exposed to risk, right? And I'm from that world. So commodities and all this, you look at well-capitalized people. So there's people or funds. You look at the companies that are prepared to move ahead. So they've got a good cash balance. They're not afraid to do that. In other words, because if they're doing that, they're not overly greedy. They didn't just push their stock up via buybacks, the other side of that coin, right, to enrich themselves. I mean, I'm putting a lot of people under black and white, but I think you get the gist of what I'm saying. And I would have liked to see Kathy Wood do more of that type of investing personally, you know.
And also, I think that it's important for everyone listening and everyone who listens later to this to realize that there are a lot of other ways to invest in growth that don't have anything to do with ARK. I know that's kind of become the flagship fund, and it's become very popular. And like Andrew said, kind of a victim of their own success in some ways by amplifying some of these moves. But at the end of the day, you know, there are things like QQQJ, which is an ETF that gets you into some of these internet innovators. There are QQQE, which is the equal weighted NASDAQ. You know, there's the mid cap growth fund like MDYG. Like if you're not picking individual stocks, there's also the SLYG, the large cap, small cap S&P growth fund. So there's other proxies that don't give you the same kind of like activist or not real actively managed fund risk, I should say. So, you know, if you're interested in growth, you're not picking individual companies. You can always also look at themes. For example, in my opinion, I think one of the more reliable themes in tech and growth is going to be cybersecurity, because at this point, there's really no way that we can't invest in it, whether we're an individual, a corporation, or a government. You really have to be investing in cybersecurity. Even if you're a small business or even like a family household, you know, you have some level of investment in this space on the periphery, whether you've got, you know, at the individual level, like a firewall in your network or antivirus or endpoint protection, or some kind of identity protection service, or whether you're a corporation and you've got, you know, more sophisticated versions of all those things. And then you've also got, you know, VPNs, and you've got private clouds, and you've got protected data and other kinds of compliance and requirements that might require like vulnerability assessment and orchestration and management of your security functionality. And then, when you look at the government level, you take all that and you add to it also just, looking at the scope of all the data the government deals with. And it's pretty incredible overall how much they deal with. That's another area where there's just a lot of need for cybersecurity that's only growing by the day. And you've got a deficit of professionals. You don't have enough cybersecurity professionals to address the demand. And we're talking by the millions just in the USA, and for many years expected to be the case. So there's a lot of demand for automation and orchestration at the software level for more efficient ways to govern an organization or enterprise's cybersecurity. So that's also another driver for this space. So, when you look in the growth space, like some people will talk about things that are more speculative, in my opinion. And I think you got to be really careful, like with some of the stuff that's like Rivian, where you don't even know when it's going to make actual money and be able to sustain itself. And it might dilute you to a fraction of the current value. Stocks like that and biotechs, I think it warrants more care and very careful risk management. But then when you get on the other side of it, like you can look at, and I'm not endorsing any particular company, I'm just saying look at some of the, comparative value propositions here. When you look at a company like Tenable, TENB, it's not trading in an irrationally high valuation, and it is growing, it's profitable, and it actually has a line of business in compliance and orchestration of vulnerability assessment and management that is, it's not like traded like a SentinelOne where it's trading like 80 or 100 times sales or whatever it is now. It's a pretty humble valuation, and it's a company that maybe at some point will be acquired or they'll just keep growing organically. And there's plenty of others like that. So within growth, just because something's a high flyer and it's a favorite doesn't mean it's necessarily a good thing to buy. And I think a lot of people learn the hard lessons on that throughout 2021. Things that seemed great in January, February really fell off a cliff. And then some of these other things kind of underneath the surface just kind of continue to perform. And so you got to be selective where you're putting your capital. I think it really matters that you understand what it is you're buying, the investment thesis behind it, that it's continually validated, because these companies, if they miss expectations and they're trading at irrationally high valuations, they can crash. So it's usually good not to be buying something that has an irrationally high valuation just in the first place. But, if you're going to, you have to be very studious about understanding why it has that valuation, what kind of growth is expected from them to maintain it and to either have multiple expansion or to grow into that valuation. Right. So that's why I think some people got burned on some of these stocks that just went up and up and up and up, and eventually, found a lot of selling pressure. And some of these things are down 70, 80%. And some of that happened very, very rapidly in the last few weeks. So I would say in the space, there's fallen angels. There's babies that got thrown out with the bathwater. There's certainly, a list of growth companies I keep an eye on, and some I acquire here and there when I feel like the risk reward is in my favor. But I think for everyone, it depends on your risk tolerance, your time horizon, how much capital you're comfortable putting at risk, because with any investment, your capital can go to zero. So you got to keep that in mind, especially with growth, because it's higher beta, it's more speculative. So just kind of keep that all in mind.
All on red, as we say, yeah.
Yeah, don't put it all in any one company or any one sector or anything like that. Be a strategic and diversified investor. Be opportunistic with your capital allocation or removal where you can. That's the best advice I can give, just to try to help people. This is how I do it, so I'm not telling you how to do it. I'm just telling you how I've done it and how other people I know that are professionals that have mentored me, do this kind of stuff. And it's a lot different than what you might see on CNBC or on FinTwit. Real professionals manage their risk a lot differently.
So I think pictorially, the way to describe what Alex is talking about, I put it up there, is a chart of upstart, right? So hot technology, then it became a herd favorite, then it became a short favorite. So the professionals get it wrong there too, right? The so-called short funds, we all know the classics of GME and AMC, but you saw here where options when options get crazy expensive involved, that's a good warning to you right there, right? Natural gas did that right at $6, $6.50 too. But look at that chart there. I mean, we talked about that ad nauseum. Well, not ad nauseum, but we talked about the other day, and look at how it's never. So in all that bounce of the last few days, this thing didn't really bounce much. So compare that to, Alex went through a few other charts the other day. Look at this one. So Task, which we now know is from Texas, not from Denmark, it held on to its gains of the past few days. So that at least tells you, I mean, it had the obvious same blow off, but at least I'm just saying when you go through them, you can see some that other buyers like, because the market's always right. Who was the other one you had? CFL2, Remind me what they
Yep.
do. Aren't they a security company? Am I right?
No, they're more in the
Close.
realm of enterprise data and infrastructure. So they design data infrastructure to connect application systems and data layers to what they call real-time central nervous systems. So they're kind of in the realm of basically helping enterprise realize the value of all of their data and make it interconnected with greater speed and visibility.
Okay, so that's certainly a one of the future. But so the main reason I'm going back through these is looking at how they look technically. You can see we went through that again. I won't bore you with that, but they're all the sort of thing you look at. Now, here's one that we talked about. It's a company that's distressed, has problems, missed the boat, however you want to put it, is Revlon. So Revlon was a good example that they tried to pump over the last 2 weeks. The cynical bit of me is this was a stock that a lot of people got caught on, they wanted out of. So lo and behold, it gets pumped on whatever news, goes from $10 to, what's it go to? Nearly 14 bucks. Look what it's done once that's run out. So look at that. Are other people interested in it? Now, and you got to assume that you're not the sharpest knife in the drawer and you know everything. There's someone else out there. That's how I think of myself anyway. So once you see that sort of thing, and particularly if the only reason you bought a stock was for short covering, because the market's short, that is probably the worst reason to own a stock. To trade it, great, take advantage of it if you're quick and fast and don't get caught. But that's another good reason, because if smart people have done all this homework on them, there's a reason why they're short. Now, they'll get them wrong occasionally, like what's Jim Chanos got it wrong on Tesla. You know, so he stopped out and he says that, but he's got it right on plenty of other things, but he'll say he's wrong and he'll have a thesis or a strategy of why he does stuff. But all those things are things to take on board, I think.
And can we take a moment just to talk about that? Because that's a theme that has become, it's taken on a life of its own. Like, it's very important to emphasize what Andrew said. It's find a day trade or even swing trade, something that might be a massive squeeze. You know, you might get a couple days of gains out of something like that, maybe more, although it's very rare. Usually it's just one day, sometimes just a matter of hours. But you can't use that as a part of an investment thesis. It's not. It's not at all. In fact, there's a whole meme that goes around places like Reddit and FinTwit and StockTwits where like people are buying stocks because the short interest is really high. Well, that doesn't mean anything. That doesn't mean that the stock is going to has to go up. And in fact, if the people that are playing these things aren't doing it strategically, then they're not even going to be able to move the shorts or the price of the stock around at all. Like the kind of stuff that you saw in like GameStop and AMC during its heyday, there's institutions on the buy side of that too. They knew exactly what they're doing, what strikes to buy, how to put the pressure on. You're not seeing that kind of organization in a lot of these attempts to move stocks. Now, obviously we do every day. We see a couple of these flows coming through, short squeezes, delta-driven options buying, and sometimes gamma, although it's much more rare, even though the word gets thrown around all the time, it's much more delta-driven, and that means the strike price is pretty close to the actual price, and the expiration is very close, and it's just really encouraging market makers to hedge by buying a lot of calls. Well, you know, if people aren't organizing those efforts, and I'm not encouraging them to do anything like that, but it doesn't have the same impact. And that's something that I think it's fallen on deaf ears, because remember in 2021, we had record options participation, especially on call premium bought, but also on put premium sold. That's one of the reasons we had that big swoon from late September to October, because there's just so much outsized euphoria on the retail side. The options driven buying that happened before that was the biggest in 2021. At 2021, options volume and notional value paid for premium was much higher than that than in stocks, especially in the volume size, about 50% higher. So we know that options are now the tail that is wagging the dog of the market. So you got to be very careful with these things. Like we touched on Tesla, you know, one of the reasons that a lot of shorts got burned on Tesla is because there were just so many intensive flows, buying shares, buying options, pushing price up. And, you know, that's something that once it dries up, there's just a pocket of hot air below. So you look at Upstart, you look at Asana, you look at Affirm, you look at, a lot of these shares that just rose and rose and rose, a lot of it due to incredible amounts of call buying, you know, near the money, near expiration, pushing prices up. That kind of stuff, when it happens and those flows dry up, often is the case that those shares fall. I mean, there's technical reasons, there's order flow reasons.
There's no other reason to buy it, right?
Right.
So
So, you see the momentum traders are getting out, whoever was pushing the options prices, the retail and institutions are getting out. And so there's no one left to buy, and the path of least resistance becomes sometimes significantly lower. So that's a big risk you run anywhere, but especially in places where the shares are kind of thin, where they're easy to push around, and where there's, the capacity to organize people to involve themselves in outsized option buying. So, be careful of that. Sometimes, like a lot of people were super bullish on Upstart all the way to 400s. People were putting inordinate amounts of money into this thing. And I was trying to be very tactical. I don't want to offend anyone, but I was warning along the way, especially in like the high 200s, high 300s, that like this looks kind of precarious. A lot of this is just options buying. And, I got some flack for it. And, I understand the passion and emotion going on. Hey, I just, quadrupled my money, or this is a 10 bagger or whatever. On the other side of it, though, when something rises that quickly and the fundamental reasons aren't necessarily there, it's really options driven and share driven. You've got to be very careful, because when those flows dry up, in the case of Upstart, for example, it fell like 75%. Or something close to that, right? Maybe 66 or 70%, but it fell a lot in a pretty short amount of time. And a lot of people that were buying in at peak euphoria, like when Mark Minervini was on CNBC and they said, well, what does this thing do? And he said, oh, I can't hear you. You're breaking up. And it became a meme, but that marked the peak. That marked the peak. That was it. That was peak Upstart. And we haven't gotten back anywhere close to that. And there's reasons for that, guys. Like I know that, people have different investment convictions and theses and things like that. But as Andrew said, price is always right. Doesn't mean the market's efficient, doesn't mean it's going to be right on a minute by minute basis. But when you look at the charts on a longer term basis, when you look at the fundamentals on a longer term basis, the market has a voice, and that message is something we should listen to consistently, because the market's often going to know things we don't. And if you were looking at the order flow and things like Upstart and Asana and Affirm before when they were running and before they tanked, it became clear what was moving them, and when that was gone, why they tanked. Right. And so that's an important thing that I think everyone should look at in 2022, because as option flows are not done, there's still going to be a big part of the market. It behooves us as investors and traders to pay attention to that. Why are prices moving? Sometimes if things move a little too fast one way or the other, and there isn't a real reason for it, you have to be a little cautious. Downside or upside, doesn't matter if it's benefiting you or hurting you. Price action that's extreme should be something that catches your attention. And quite frankly, I get a little more scared when prices go up too fast, if something I'm long in. I mean, that scares me a little more than going down too fast, because I'm going to get out pretty quickly and cut my loss. But if they go up too fast, I start to worry, how sustainable is this? If this is parabolic, then it's probably going to give it all back.
Well,
and it often does.
The great Jerome Powell, it's probably likely to be transitory, right? Or temporary.
Right. I mean, on a long enough timeline, everything is transitory. So inflation is actually transitory on a long enough timeline. And the funny thing about Fed speak is, most people are thinking, well, okay, that means that prices, the price hikes are going to be transitory. No, actually what they're really saying is the velocity of inflation is going to be transitory. And they're not lying about that. I mean, we're already seeing some signs that it's beginning to abate. In 2022, we'll probably see peak velocity of inflation, unless there's some other kind of exogenous catalyst to boost demand or constrain supply. It really seems like all the factors are pointing in the direction of slower economy, tighter liquidity, higher rates, less capacity to buy, supply chain normalization. Inflation should begin to subdue. We should see some disinflationary tailwinds, hopefully. So that doesn't necessarily mean prices go down, but at the consumer level, but at the raw material and producer level, they could.
Well, so I mean, there's a few things we could talk all day about inflation, but I think a lot of people forget, and I think Powell is kind of on the right track, actually. So everything inflation got distorted many years ago the way we calculate it, when Greenspan changed the whole basis, right? And for whatever reason, conspiracy people say, oh, that's just the new, the elites, blah, 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 not counting it. Well, there's a few things. One, some of it is real, and this is what I think most people missed, and Powell didn't really miss this too much, because remember, he's not a bureaucrat. He's worked in the real world. He worked for Carlyle as a lawyer, blah, blah, blah. But so he's not your academic like so many of the others that have no clue of the real world, and I mean that truly. They're not going in and buying bread and milk and all that things like us. They're not filling up their car with petrol or gasoline, etc. Right? So their real world escapes them. So there's a big difference between Main Street and Elite Street. They're funded, a lot of these people, by Wall Street. either now or later. That's not a joke. It amazes me that someone like Yellen is allowed to have the power as Treasury Secretary after being a Federal Reserve chair and then getting $500,000 to do the odd speaking engagement. So their word
Yep.
isn't real. They're distorted, and that's the one thing I like about Powell. Plenty not to like about him on one basis, but heck, what kind of job is that? You're dealing with the absolute corruptest politicians we've probably ever seen. Other than, through history there might have been deals and that, but you've got openly trading stocks now. We had that with some of the Fed guys. Obviously, you backdoored them and said, "What the hell?" There's one thing managing your portfolio in a blind trust. There's another one. Is gasoline included in inflation? I would expect so. But I think
yes, it is. It is. It's included in CPI. It's not included in PCE core.
Well, yeah, and remember that. So the inflation the Fed looks at. Good question, Seb. Is the PCE and also the Dallas Fed one where they line it even, they smooth it even more. I think it's actually called smoothed, but that's the Dallas Fed, and that usually comes out the day of or the day after the PCE. So I think the energy caught a lot of people surprised that are in politics because, and we talked about this earlier in the energy, it became almost like blasphemous, right? To say anything positive about energy. That's what's killing the world because it all becomes a money thingy. Speaking thing, and I know I'm probably getting in trouble saying this, but we had a 17-year-old girl from a country that doesn't basically use it. Everyone deferred to because they didn't want the responsibility, in my opinion, of that. And they're all at the same economic meetings, they're all at the same political meetings, and all of a sudden, and think about this another way. They did all that. Imagine if we didn't have the virus shutting down the world for 2 years, because we already had in place how bad it was to do all that energy. Imagine where inflation would be without it. That was quite a good handbrake. So the reason and a lot of the supply is actually back. It's not a lot of companies that managed it well don't have a problem with it, particularly in the semiconductor space. That stands out, and that's the one we get blamed for. The whole semiconductor with cars and there's a good article by the Pitbox from January on our side about it. We're talking about how the American car companies, the German car companies, basically Volkswagen, GM, Ford, bludgeoned the chip makers over the years and kept refusing to pay their price. All of a sudden, they had to pay their price because Taiwan Semi just said, bugger you, right? And ASML and all these other ones that have done really well. The same thing Nvidia, by the way, has said on the gaming side and the Bitcoin side. Apparently you're not allowed to say that the car companies. So that's just shockingly bad management, but it's become also convenient to cover up all the shocking energy policy in not just the US, but in England and other countries, right? So there's a whole thing to me, that's all pretty clear, I guess, because I'm in it, right in the middle of all that. And there's a question there back on energy that Seb, on your lithium question. Thanks for all these questions too. So lithium, coming from that neck of the woods, there was a big takeover the other day from Rio Tinto bought a Argentinian lithium project. I want to say for about 820 odd million. So how do you invest in that? You want to be buying that at the right level. So the good people in lithium are people like Piedmont. I think that symbol PPP. People like Rio, the people that know what they're doing. They have the money to mine it, right?
There's also pure plays.
Yeah, so the pure play would be Piedmont, not so it's PPP, I want to say. They're an Australian company that owns basically the best US mines on it. Who to stay away from are people that aren't really that, but the buzzwords. One that stands out to me is a symbol called WWR, which was ramped from $2 to $10 or something on the base of it. They're basically a graphic miner with no money. There was a new IPO a while ago. It was at LITM. So if they don't have the money for a very intense mining, and it's a very dirty mining, yeah, that's it. Yeah. What did I say? PP. I got obsessed with PPP from the tax. Sorry. I was doing the tax the other day. I gave that away, didn't I? But people like that. So how to invest against inflation? I think you just do quality investing. That's the answer to everything. Don't just buy something. Gold's a great example. I'm not a gold bug, and I'm come from a country that flogs their gold as soon as they pull it out of the market, out of the ground, right? But it is a hedge. I don't look at it as a hedge against inflation. I look at it as a hedge of reality, like it's real, and when people tell me Bitcoin is a gold equivalent, I say the complete opposite, really, because what happens to the whole Bitcoin world if there's no computers or there's no electricity? At least gold, how do you change it? So it is a different thing. The old way, the true way, would be you own your own land, you own all that. The things that are going up, which go up from shortages, would be food, all that sort of stuff. There's many different interpretations of that,
Yeah, I was going to say, it really depends on where the inflation's happening, right? I mean,
Right.
inflation isn't like a universal force. It can happen in energy, it can happen in agriculture, it can happen in base metals, it can happen, just from currency debasement. There's a lot of drivers
That's
for
the big
inflation.
one
So
right there, actually, that gets neglected. Ask Erdogan why he took such drastic measures at the end there.
right.
Um,
And so, when you're trying to offset that, it depends on where you live, and it depends on what kind of inflation you're experiencing and what you have access to that you can utilize. If you're in the United States and you're worried about inflation here, you'd kind of want to quantify, where am I worried about inflation? Is it going to happen in commodities? Is it because of that, or is it because of currency debasement? Is it some combination of the two, since commodities are priced in dollars? And then you'd want to position yourself in companies that are, increasingly profitable, that have good business models that benefit from those rising prices. And, that's probably, a better way to capitalize on inflation than buying a shiny rock and hoping that, it's going to maintain value. Is it going to offset inflation? You don't know. Like, if you compare gold
that last
with an
bit's
honest
important.
accounting,
Value. It's
yeah,
maintaining value.
absolutely. If you compare gold over time with the purchasing power of the dollar or erosion therewith, you're going to find that it's not really keeping pace with an honest accounting of that. And then you compare bonds and stocks, and surprisingly, you're going to find they actually outpace inflation most of the time. Not always. There are certainly stagflationary exceptions like the 70s, but look, at the dollar has lost something like 97% of its value over the last 100 plus years. We call it 107 years or so. That is pretty indicative of a problem in terms of maintaining purchasing power. And that's not new. Most currency loses value over time, especially as there's a population growing. You want some degree of inflation to have enough resources and enough currency kind of available to everyone. That's kind of part of how that works, but it can get ahead of itself. And so, if you look at the stock market performance, you look at the bond market performance throughout that same period, what you'll see is they more than offset the debasement of the dollar. So it's not just that stocks are going up, it's also that the purchasing power of the dollar is going down over time. So, if you find where the inflation is happening, kind of why it's happening, it's easier to hedge against than just kind of saying, okay, I know there's inflation, I want to protect myself. But I would say, like Andrew said, it's not necessarily going to happen in precious metals. Sometimes you do see a fear-based impulse. Like in 2008 and in 2011, there was a lot of buying in gold and silver. There's a lot of this call, it was going to be the end of the dollar because they're doing QE, so now we're all going to die. And of course, it didn't happen anything like that, because there was so much slack in the economy and so much debt. It was actually a disinflationary to deflationary period, and so precious metals eventually rolled off and got brutalized. And a lot of those other kind of inflation hedges didn't do so well after commodities rolled over after 2011 and 2014. Kind of depending on where you're looking, metals or energy or so forth. But everyone thought that massive QE was going to be this big driver of inflation. And it was a similar thought during the most recent episode of QE. And we saw, that fear bid in precious metals. Gold made new all-time highs in August of 2020, but it rolled over. Even though, we see inflation reads at record levels, it's not rallying where it was. It's not above its all-time high, even though inflation's at highs we haven't seen. So that's something to keep in mind when you look at precious metals, and also when you look at Bitcoin. We got the highest CPI print in a very long time, it was like 30 plus years, and Bitcoin rolled over. It didn't rally because some of these things aren't inflation hedges. They're rate sensitive high beta risk. And that's
Yeah, I
true
mean,
of crypto, and it's true of precious metals here too. I hate to say it, but it is.
well, I mean, so a lot of these things, inflation's a good example. We've had inflation pretty well, ever since Jay Powell started talking about transitory. Then all of a sudden it becomes an issue way after the event. So basically, when everyone's talking about it, we already have inflation. So you're more likely on the downward. Like when people are telling you to buy stocks, is usually at the fifth wave of something, right? Same thing's inflation. So just think about it. So if you've got a lot of all of our parents here and grandparents that have built wealth over time, it's usually been in things like property, buy more property on the downs and stuff like that. Stocks have held a quality over time. Some of them have got lucky. I don't have a relative like this that happened to buy Apple at 5 cents and now, whatever. But generally, that inflation factor that comes into that is the same sort of thing. It's timing, you know. Gasoline's a very good example, or oil, or anything. If you look at an oil chart, look how it's cyclical over time. So it depends when you buy it is the real answer, the secret. When you're hedging against inflation, you're hedging your assets with real assets. So when you buy gold on the falls, not when everyone else is buying, or silver or platinum, whatever that precious metal could be. I mean, really, the true precious metals of the last 5 years have been lithium. The last couple of years, copper. I mean, palladium. You know what I mean? The new metals,
Yeah.
nickel. So what's the key there? You use those metals. So when gold was used more, I mean, I must be one of the few people that gets gold fillings when I get fillings, apparently. But there isn't, in all seriousness, there isn't the same uses of, say, platinum in catalytic converters. But the key there was they weren't just a store of wealth, you were using them for something else. And that's the problem I have, and I'm hardly a
Well, so
lover,
you
but
guys,
that's,
part of the
hang on.
part of that, I'd like to just say something here, because part of the narrative with Bitcoin as a digital gold only relies on the idea that it should hold its value as a long-term hedge against inflation. But on the other hand, it has no intrinsic value. Instead, it's a value based on the people and what they're willing to pay for it, as well as the potential of how it works
Oh,
technically
definitely,
on
and
networks.
welcome, Johnny. Good to see. Sorry, I missed you earlier, but yeah, that's exactly the intrinsic value. The problem I have more with Bitcoin, comparing it to gold, is if it's the end of the world, for like one of those movies, and you can hold gold if you don't have any power or computers anymore, or the so-called man, is controlling it all. And actually, you could use this argument against gold too, because the America did confiscate gold, remember, back in history, not too far away. So we were just comparing it more with that. And so, if if Bitcoin can be used like nickel and lithium and which have created a life of their own because they're used in not just EVs, but also in turbines for windmills, etc. There's a lot of good uses for them. So that's where we were with that comparison. But yeah, I'm interested to hear your thoughts on what you're saying there more because that's my concern. How do I get over those concerns with something like
Just think of this one thing, mate, is we live in an age of technology.
right?
Technology makes Bitcoin very stable. It won't degrade or degrade. Okay, so it's impossible to counterfeit it also. So on top of this, unlike gold, it can be moved. It's portable. You can go anywhere on Earth, and it can travel anywhere on Earth in just minutes, especially with the new technology with the Lightning Network and things
I agree
have been
that
built on top of
with
it.
good technology, but my problem is if we're in those what's the word I'm looking for? Apocalypse kind of thing. If we're in that situation, we don't have power. I'm saying the worst case scenario. Where does Bitcoin fit in that? So I'm not
If that
saying
happens, I don't
it's
think
going to happen. But I'm taking that.
Well, none of it we could do anything anyways.
Well, I guess
none of us
the
could go anywhere.
argument, my answer would be, if I was doing the debate, I'd be saying, well, it's all bloody over then anyway, right? So what's the matter?
You won't need anything.
Jesse, it's anti-inflationary, not a hedge against inflation. What are we talking about there? Are we talking about Bitcoin or gold or?
Oh, Bitcoin. I mean.
No, there's a question in the Jesse's asked. It's anti-inflationary, not a hedge against inflation.
I think what they're talking about is that, you have the number of coins decreasing over time, but that's a construct within Bitcoin itself. The conversation was originally sparked by a question that was, how does one learn to hedge against inflation? And so we were just talking about various different assets and whether or not, and various different investments, and whether or not they were actually historically effective as a hedge against inflation. Now, with something like Bitcoin, the reality is that no matter what our opinion is on the subject, there's not enough data to say whether it is a good hedge against inflation. So
that's why right now the fear factor is, if you looked right now at the fear and greed index, fear is pinned down. It's just there's a lot of stuff about, what you're saying.
On the Bitcoin one we looked at yesterday. Actually, on inflation, this number just dropped. The South Korea just dropped their CPI. It's the fastest since 2011. That just dropped.
Gold's been good for the last 4,000 years. Inflation
has, but it also kind of hasn't. I mean, look, I believe that it has a place in someone's portfolio. But, you also got to look at okay, how did gold perform? How did equities perform? How did bonds perform? Obviously we don't have equities and bonds over the same period of time, but, it has a place. It's kind of anti-beta. It's not very well correlated with stocks, so it helps a little bit as a potential
store of wealth, actually.
Right. And that's kind of the point.
Yeah.
Right, and that's kind of the point that I wanted to get at. Is it more just helps to hold value more than it hedges against inflation. And I think if you look at what happens, we have a very interesting financial system. There's a lot of counterbalancing systems that work inside of it. And one of the things that a lot of people aren't necessarily talking about is sometimes during periods of high inflation, rates are going up commensurate with inflation. And that is actually a self-limiting factor for precious metals, because as rates go up, people say, well, why wouldn't I just buy a bond or a tip to be able to get that, payment that helps to offset the inflation in something that may also be a better hedge overall. And of course, if they let it run to maturity, it doesn't matter if the principal drops during that time. On the other side of it, if you're buying gold, and this should be the most ideal environment for gold ever right now. You've got negative real rates. You've got an abundance of liquidity, kind of swishing and swashing around into the global financial system. And gold made one brief all-time high in August of 2020, and really has had a lot of trouble. Now we obviously have no idea what's going to happen in 2022, but silver also made a year high of about 30. It's down to 23 now, so it really did roll over too. So we have some of the hottest inflation prints our country's seen in decades. And we're not seeing the metals run commensurate with that debasement of the purchasing power of the dollar. So that's my concern. Does it mean that they can never perform? No. We might get another fear-based impulse that brings gold to new all-time highs. Is 3,000, 5,000 out of the question in the next 10 years? No, it's not. But we just have to kind of recognize that some of these moves are esoteric. Others happen because of emotion, and rarely is the case that it has a good correlation with inflation.
Yeah, I think, to me, gold is a great store of wealth, the fear factor and all that. At the end of the day, as a currency or something. And that's really the question versus, say, Bitcoin or something. And I actually think, and I remember it wasn't Powell, and I really can't remember who it was, but in one of the Fed minutes or Fed speeches, part of the argument of why inflation was transitory was what you just said. Gold, because I was saying gold has been historically a measure of inflation. Gold was falling, and that was part of their rationale, that therefore the inflation was not permanent, it was transitory. So, obviously that's in a lot of people's minds. So in other words, I was saying gold is actually telling us it's transitory. That was their argument. I forget who it was, but it was one of the Bitcoin stuff.
So in your you have points.
Not run up so much.
So all these things I think are playing against each other.
You probably know who it. I can't remember who it was. But it's a valid point. We're looking back at it. If you want
I
to.
think the guys in Bitcoin want to get away from centralized banking and have,
Well, that's a whole different argument.
these central
though.
banks control the
Yeah,
monetary
that's a
system.
different argument. Though.
That's
being
it. All
away
rolls
from
into,
demand,
but I think
right? So that's I can take you to any building site in Houston, and don't if you're listening, authorities, I will deny I just said this, but I can take you to any building site, any farmer's market, everything's done cash is king. They don't even want to be on a Venmo. You know how you're probably paying your son's baseball lessons, because they don't want to be part of the of any control world or Big Brother. In fact, Nigeria just bought on maybe 3 months ago now their own coin. And the reason it's not taking on, Nigeria government says, we're doing it to make it easy for you because you can't have a bank account. What are not a lot of Nigerian people are not taking it up because they don't want to be part of a system that tracks them, which is the bank account, right? So
exactly.
In the Western world, we're saying, hey, man, I want to be on Bitcoin because I don't want to be part of a system. In the third world, which apparently all us in the first world know is how they should think, they say, hey, hang on, mate, I don't want to be a part of that. So there's all these conflicting things around them, which is wonderful, really, when you think about it, because people are still wanting to think for themselves. A lot don't in the Western world. But really, the whole outrage movement and the dis-outrage and the anti-vaxxers and the pro-vaxxers and the bloody whatever it is Prince William banging this woman. Who really cares? It's a minor percentage of the world, I think, is just controlling the whole diatribe that's on social media, etc. At the end of the day, there's valid points in a lot of these, I think. But I just found it really interesting that Nigeria took that truth. And Madavi's got some very good points as far as gold. I look at it as a store of value, not as because there is a limited supply of gold. That's unless we get hit by another bloody meteor, which we probably don't want to be here. Didn't you see that movie the other day? That's all right, some movie the other day. But anyway, we're digressing a bit, but I think we get it.
We're also getting to a point where pretty soon at a molecular level, you can just create gold. Like, I mean, there's so many things that are going a long way in terms of how we're able to create things. And eventually the same problem arises with Bitcoin too, with quantum computing. It'll be interesting to see how they reconcile that. But I mean, eventually quantum computing will be able to break the blockchain too, for multiple cryptos. And that point might not be as far off as people think. So a lot of these things, you got to be careful where you put all your eggs. Don't put them all in one basket. Right.
Yeah, that's true.
So
and
I know some
Jesse,
people.
that's a good point, and that's along with what Johnny's saying there. It's not anti-inflammatory and it can't be debased. The debase would happen though with the quantum, if I'm understanding correct, right?
Years, and they still haven't been able to produce 1 ounce of gold, but the diamonds they've been able to do.
Oh, you're talking about my ancestor into all that. What do you call it when you
gold?
What's the word for when they create gold?
Yeah, it was alchemy.
Alchemy. Yeah. I'm sure my ancestors did that when they were raping and plundering. I shouldn't talk about that.
Good Lord, mate.
Sorry, that's
come
just
on,
for the
mate.
Scandinavians and Baltic songs. In all seriousness, they've tried that since Adam was a boy, and no one's been able to change it.
Yeah, but now.
Let's be real.
Yeah, but that was all like alchemy and stuff. We're at a whole different level of technology now.
I mean, come close to it.
Well, that from what we know publicly, that's true. But we're also at the cusp of being able to do things at a nano scale that no one thought possible. So
that is true.
Hey, it's not going to. So here, that's a good point right there. It's not going to affect the markets unless it becomes public that you can make gold again.
Well, it is true. This is true that some of the major companies in their space programs are actually looking at ways to get onto asteroids and mine this stuff. That's the only way I can see that it could ever happen. Could that even happen though in reality? It's a long way away.
Elon may make it to Mars, and there might be a lot of gold there too.
You got to get back from Mars, though, right?
Just remember, though, with the money supply growth that we have had, if gold was tracking the growth of money supply and truly was hedging against inflation or even storing value, then in the last 10 years, it should have easily surpassed $5,000 an ounce. That's just math. That's just math. And I'm not saying it's not doing its job. It's just not doing its job well.
If you
And
take
that's a bit of an issue.
to Bitcoin, and if Bitcoin wasn't here, now a lot of ex-Jenners are putting their money into Bitcoin.
That's a good point too. I
That's
agree with that.
great
Yeah.
point.
No, I agree.
And then you would see the.
But it is here, though. I mean, you can't
But-
say what happened 4,000 years ago. Bitcoin is here. Even Johnny will say I'm that much of a Luddite.
Bitcoin's going to be here to last for the next
Bitcoin
5
is
years,
here.
or it's going to be next 100 years, or next year. We don't
But
know
I
that.
mean, in 100 we're dead, mate. So
Yeah.
Oh, I know. But I'm saying next 5 years it could be gone
unless
too.
there's something I'm missing.
You know,
My only question is, guys, what happens if we wake up tomorrow and our money in the bank is not worth anything, like Venezuela?
Mate,
Well,
you do what I do.
yeah,
Again,
sure.
I'm not going to give you my address, but I have
hold on. But
it's in
hold
my
on a second.
backyard.
No, I just want to ask that question.
Hold on a second. But I'm really curious about how this plays out, because if we have actual hyperinflation, the first thing that happens is rationing of resources. When you have rationing of resources, the first thing they ration is energy. Well, where's all the energy to mine these things if we have hyperinflation?
In fact,
all that stuff
China's
gets shut
already
down.
doing that, actually.
And that
That's
would be
what we're
something
trying
that gets
to-
shut down everywhere very quickly. So, like the idea that it'd be like an automatic hyperinflation hedge, I take issue with that. In that situation, I'd like to have gold, guns, chocolate, like things that people want. I wouldn't want to have any digital currency.
Okay, so
because
let's
I
play
don't
that
think
out
I'm going
too.
to have any power.
If you have if a currency debases, if the dollar goes to shite, if that all happens, okay, just think, what and how are people going to commerce? Just
Right,
answer.
but if there's rationing of resources like energy and infrastructures that working well, then you're not going to be able to do commerce with digital resources.
Well, I guess El Salvador's producing their own mining stuff, so I guess they'll rule the world.
El
Because they have
Salvador,
their-
yeah, that's going to be.
El Salvador's going to have their own energy. and
Okay,
everything.
now it's getting too early to start drinking, but you make
I'm just kidding.
a day earlier, but hey.
Try to go get a roll, see how much you pay.
But you know,
Make conversation.
actually, so anyway, all jokes aside and all that, yes, you got to buy some land in Texas, buy some guns, hire some people. You know, is that the world we're going to? I don't believe so. But
No.
there were some good
No,
questions
not
earlier
anytime
before
soon.
we got on track on lithium. An interesting play when in a lot of these commodities, you've got to, if you're going to invest, you've got to be in a stable country. So lithium, the stablest two, the most stable are going to be Australia or the US. Rio is now born in Argentina. South America's more or less stable now, you know. Not so much Central America, though I do understand El Salvador's going to be the beacon of the world. But an interesting article, the reason I mention that is when I was just looking at lithium for Sam, I think it was. So, for example, one of the biggest holdings is the Mexico one we're all familiar with if we're in America, because it's got a lot of press with Abrador's AMLO. I'm sure you don't have to be in Texas or California to be aware of Mexico. The reason that's relevant is China tried to muscle their way into that, and Mexico's either going to nationalize that, they've already said they will, or they're going to do some view of it. So when you invest in commodities, that's a really big, important thing. It's a geopolitical risk of any of that. That's all I really wanted to touch on that there. So, I mean, because that's one of the, there's only so much lithium, nickel, and these things around the world. That is a real risk in companies like Vale, for example, their iron ore, where they have a base. You talk about Chile and countries like that. So anyway, that's all I wanted to break into our argument, discussion, the wrong word again, about where we can go. And there's lots of factors that are interesting, right? That could all, so the bifurcations, there's so many unexpected consequences in all these things. We're seeing that with ESG more than ever right now, right? So those economic policies. We're seeing them with Bitcoin as far as, so what I think is going to happen, my personal view on crypto, is going to be the more, whoever wins in the end of it, because there's so many and there'll be a contraction, you know, like anything. the one who wins is going to be the most energy efficient one and less reliant on energy and big oil and big gas and governments and all that. Who is that? I think we'll find out. That
It's funny that you mentioned that, and I wanted to just throw one thing in, is that the proof of work that goes into mining, making the coins, the Bitcoins, it's what's creating this big controversy over how much carbon footprints being left behind. And Ethereum was on the same proof of work. But Ethereum is doing the merge where they're going to proof of stake. So proof of stake that's where guys like us can go out and we can stake our resources, which are just our computers. And proof of stake isn't taking the same kind of energy consumption that the proof of work that Bitcoin's taking.
Yeah, definitely.
So
definitely.
there's new ways, and that should make Ethereum possibly one of the biggest players. It's just security and things are going to play in, and that's going to play out. But I think that a lot of these new companies that are coming out are all doing proof of stake, and there's a lot of money to be made. You stake your coins, and you stake, these new developers, and that's one aspect of things that you just have to think about too.
Yeah, and it's certainly evolved. What's exciting about crypto, I mean, we joke a little bit about buying land in the metaverse. It's all in good fun and all that, but what's exciting is how it's so quickly evolving. And something, I mean, it's like anything, right? It's like, we were talking about stocks before. Some of them that looked fantastic a year ago are just a bust. I mean, we can go through technology. We remember the compact computer, and who was the one before that? Who was that one really big? So they're all go, and it was
NEC.
the same. Yeah, and no, it was like Wham or Yang or some. What was it? It was one word.
That was Wang. Yeah, Wang.
Was it Wang? But there was also.
Yeah, I think it was Wang.
And so we're going to be. I mean, the odds are. Well, even you think. I mean, Alex talked about Facebook before replacing Friendster and all the ones before them. Someone's probably going to replace. So who knows? But out of the Bitcoin? Yes, Bitcoin is the grandfather, but you do have other ones coming up. Pretty quickly. Thoughts on your but I mean, that's what's exciting. Johnny's like, I mean, so to fit him in, Madavi, Johnny and Alex, we've all been friends for a long time. In fact, I'm not going to give my age away or Johnny's age away or Madavi's. We've known each other longer than we should have, really. But he's always been the guy that's always been fascinated by technology. Madavi and I are kind of more your ex-footballer brains at times sometimes. But in seriousness, that's what makes it exciting. Good question from BP there on uranium. So uranium is an interesting one. For the Australian emirs, it's probably well known that they're one of the leading miners of it in the world. It's very political. Well, what that means is who you can sell it to, who can mine it. So your decision has to be more on that. It has to be more on, okay, there's a few that can mine it, but who can actually sell it, right? So Australia obviously is not going to be allowed to sell it to Iran and they're not going to sell it to Israel, and it's got to be a politically kosher, okay kind of country. So you want to go with that. I'm trying to think of the Range Resources was a big one, and who did they get gobbled up with? I need to look into that. I'll come back to that, BP, but that's the question. When you're investing in something like that, it sounds terrible, who has the best lobbyists out there, right? So if everything comes, just say we do a deal with Iran, right? The political, and Madavi can speak a lot better than me. But just say it's all done. Everyone says, you know what, Iran, it's fine. You can go use your nuclear energy, right? Get over this. They're going to build a bomb and blow up the world's nonsense. Well, that's my view. It's nonsense. And I'm pretty sure Madavi would agree the same, right? It's used for a reason. So just say that happens. Then all of a sudden, that's a great customer, right? So the demand for uranium will go through the roof, but it's also a dangerous, it's not like, and rare earths are the same. They're very dirty to mine. So it's got to be a country that allows it. For example, if you're talking rare earth, Lynas is an Australian company out of WA, Western Australia, that Australia does not allow to refine it. It's all done in Malaysia, because it's so dirty. China doesn't care about that same workers' rights, and actually Texas is doing an arrangement with them, with Lynas now. Same thing with uranium. So there's a political thing that, unfortunately, for most people, it's just tied to nuclear bombs and all that sort of stuff. But it's also nuclear energy, so it's a political thing. I mean, I didn't really answer it too clearly there, but that's how you would invest in it. I'll look in a little bit more on companies with that.
It's funny that the person that's got like the most judgment is the only person that dropped the bomb on people.
Right. So yeah, we don't want to get political on it, but
no, it's not political. I'm just saying it's kind of world war.
So
one thing about uranium, they're building that new plant in Wyoming. It's going to be a nuclear facility. I don't know if you guys heard about that.
Right. So let me just look quickly on while you guys are talking on CCJ to correct my memory.
The only reason I bring that up is because if they're doing uranium plant there, that means
fault. That one started leaking.
That's Chemico. Yeah, I know about it. It's CCJ. So they're the Canadian uranium company, and they're the second. I didn't realize that was Chemico, but they're the second largest in the world. So Canada. I mean, I know there's a lot of stuff. They're a bit of a mess politically now with what's been going on there, but in intensive purposes, they're a solid, political, safe country, right? So yeah, so it would be looking to who their customers are. But yeah, so I mean that's really how I would, and a lot of commodities are that too, right? It's not coal's your best example of that, So it's whether the country can stand on their own 2 feet and make their own decisions. That the latest, and again, whatever your views are on oil, gas, wind, whatever, don't confuse those views with how you invest. If you make the decision not to invest, it's like not investing in tobacco companies, right? Or whatever it may be. That's a whole different thing. So don't get emotive about it. But and there's other potash is another thing, or this is a potash or potash. Is another big commodity that people like to invest in of that kind of ilk. That's a little bit controversial because of the mining. But yeah, good question that I didn't really answer, did I?
No.
Should I go into politics? Any other questions or thoughts, guys? As far as trading goes, most of the world's shut. Half the world's shut that's going to be trading stocks already. So it's going to be an interesting market today. It really comes down to whether they can jam it higher, I think, to window dress it. Let's have a look if there's anything happening in futures markets before we shut up shop. Any other questions? Let us know. Yeah, so
I'll throw one thing in.
Yeah.
I had a revelation today. My revelation was I was doing a stock that I firmly believe in, and I bought the stock instead of the options. When it started going down, I immediately sold, and I looked to the options, and it was much better because I could go out to January and get them as an option for 50 cents. Instead, that means that I would have lost, or maybe it was even 25. I would have lost, for 100 shares, a lot less than if I was in a IO company and it went to zero, which has happened before.
Right.
So I just saw the true value of optionality in my trading, which I'm new as far as that's concerned.
You pick it up very quickly though, my friend.
It just landed on me. I looked at the charts and I'm like, why didn't I got out of it and I did it.
Well, the big thing with options is, and so it all depends what you pay for them, obviously, the pricing of it, you know, the vol and all that sort of stuff. But your downside risk is so much less, you know, which is the point you're making, which is good. And when vol's getting really sold off, you're basically getting them you get very good deals. So vol's just got to increase sometimes, and you'll make money on it, even though the underlying you could be wrong on, you know. The downside, of course, is most options expire worthless. That's mainly because people are buying the wrong option, or for the wrong reason, etc. You know. So yeah, that was a good revelation. Are we going to get all biblical? Are we on options? I did, by the way. I've decided to create my own mateverse versus metaverse. So I just got trying.
We already have an ARC fund, mate.
We already
have an ARC fund. We don't need to get all biblical on options here. It's going to be too much.
Oh yeah. A mateverse, a biblical mateverse would be interesting. So what would be? Well, I hate to tell you, but you're probably not allowed to be vegan in the mateverse. Vegans.
Oh well. We're all going to die now.
You got to be alcoholics. No, that'd be the Irish version of it.
The mateverse.
But anyway, good discussion, bit of fun on our last day of our year. I will look into that uranium a little bit more. We did look at that, didn't we, about 6 months ago, Johnny, investing in the uranium song. So generally what happened in that, over the years when it became if you think fossil fuels are considered bad now, uranium, was like another level of that, political hatred and fear and all that. So what happened, a lot of the good mines got bought out by either private equity, or the really big miners. So we may have to look a little bit into that. Kind of what you saw with Rio buying lithium. That's kind of what happened. Like that lithium mine in, where was it? Argentina this week or last week. That kind of thing happened. So on that note, thanks everyone for joining us. Make sure you can follow us on socials. They're all a little bit different and good stuff. And Johnny's going to start putting out some more stuff on Twitter. Which I've always found, I hope I'm not talking out of school, but you are the most, out of us, our little group, one of the most, well, Alex is the best I know in tech for cyber and picking up stuff, but you're being very big on the stuff like NFTs, the crypto world. Geez, it's getting late in the day. Maybe I do need a drink. But you're going to spend more time on Twitter because you've always been very anti, which is a good thing of the social media thing. But you did promise us you're going to do more than 2 stories a month. But anyway, all jokes aside, thanks everyone for being here. Our socials are Markets for Mayhem, Traders.com, Madavi 4, Johnny Mayhem, and the Nova Wave is basically just pure technical analysis part of what we use. So that's purely all what that is. So follow that as well. And Alex does, as you know, a truckload of technical analysis also at Mayhem. And there's also the 2 websites there, the Mayhem one and the Traders one. Like and subscribe, and you also obviously Alex. Now I'm calling him Mayhem. I'm going to get you mixed up with Jason Miller here. You don't want to do that. He's also his YouTube. That's the word I'm looking for. Is quite so very, very popular very quickly. So make sure you tune in there. He's done some great stuff already, walking through different technical analysis on specific things. Like I want to say you did natural NASDAQ, and who did you do the other day? It was NASDAQ. I forget who that was, but anyway, thanks for that. Like, subscribe, and we will finish up tomorrow. And everyone have a wonderful 2021. We'll see you in 2022 if we are on here tomorrow for a short time. Enjoy.